And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin and APTOS analysis video. I almost forgot which altcoin I was going to cover today. So yeah, we're going to be talking about APTOS. I do believe that there is a potential trade setup and on the horizon. So we're not there just yet, but I am anticipating something from price action. Now, of course, we'll be going over this in a systematic way. I will be including timestamps below for those of you who want to jump directly into, well, the altcoin of the day. Now, this is actually my third attempt on this video because the first two attempts, well, the first time I said I was not going to talk about fundamentals, and I ended up talking about fundamentals. The second time I got distracted, there was a phone call I had to take. And then this is the third attempt. But anywho, we are going to be talking about a bit on the macro markets, primarily because we have a very, very important print coming out today. And that print, my friends, is the CPI print. So we'll be talking about that very briefly, and then we'll be moving on over to the TA. Now, before we begin we get into the juice of today's analysis. There's just one housekeeping thing, which is, I was approached by a couple of people yesterday saying that the coupon code was not working. The coupon code, guys, is Krisha-BDay. Now, what I'm going to do is I'm going to link it in the description. That way you guys can just sort of copy paste. Okay, that way it works. Now, it's applicable on the seed program as well as the dynamic indicator. Now, for those of you asking me which one, Krisha, should I get, guys, my answer will always remain the same. Get the seed program. That is the very foundations. Sean is your teacher. He is an excellent teacher. And yeah, that is the best education you're going to get on technical analysis as well as risk management. Okay, that is what's going to keep you afloat throughout the rest of the bull market. So now, speaking of bull market, we can jump into, well, the macro market situation. Now, if you guys want like an in-depth rundown on what's really happening out there, you know, with the whole bank collapse, the Silicon Valley bank collapse, in addition to the Signature bank collapse, well, Sean and I actually did a dedicated duo video yesterday just on this, just explaining the fundamentals. Now, that was a very, very fun video for the two of us, and I was very happy to find that many of you guys, you guys enjoyed it as well. Now, what we really spoke about, and I'm going to link this video, by the way, in the description once again, as well as on the end cards. Okay, that way you guys can navigate onto that rather quickly. But anyways, what was spoken about yesterday was this. We were looking at this entire dump, right? Bitcoin, of course, with the rest of the markets, everything sort of took a shit. So we were looking at this dump, and I told yesterday, I had mentioned, I'm like, this is a very event-based dump. It was a cascading of events, one onto each other, that led to, well, this risk being priced in right here. Right now, what were the events that we went over yesterday? We went over the fact that Jay Powell came out swinging very, very hawkish. Right? He said, I'm going to start increasing interest rates. I know you guys don't think I would, but I'm going to start increasing interest rates. And that's why the markets got really, really spooked out, which then led to the SVB bank failure, right? The Silicon Valley bank failure, which also then consequentially led to the USDCD peg. Now, what does this have to do with the USDCD peg? Because $3 billion out of $44 billion was actually stuck in SVB. Okay, and that's what caused all that FUD. That's what caused the depeg of USDC to USD. Okay, and that's why we saw that pegging also fall apart. Then right after that, we had another announcement, of the Signature Bank also collapsing. Okay, so it was one after the others. So yesterday we went over all of these events to see how much of this risk has been eliminated altogether. Okay, how much of this has found a resolution. Okay, that way this is going to give us a direct sort of insight on whether or not this region right here was a bear trap. Okay, or is this entire move so far one big bull trap? So now if you guys want our thoughts on, what's happening in this juncture, I suggest checking out yesterday's video, okay? Of course, I will be linking that towards the end. Now, as far as today's macro market coverage is concerned, we're going to be focusing primarily on the CPI, which we get in today, right? The CPI print we received today, CPI. Now, why is the CPI important? CPI, guys, is that gauge of inflation. Now, remember, before this entire, shit show, for lack of a better term, actually unfolded with the whole banking collapse, the primary prints that we were looking at on a month-to-month basis was unemployment. okay, plus CPI, okay, because this is going to give us a direct gauge on, well, interest rates, you know, that hike in interest rates. But the Fed basically wanted to see the inflation, which is the CPI print, really come down on a month-to-month basis. And based on that, will they determine whether or not they want to increase interest rates and at what pace? Okay, so this is also why, and why was this important? Because this essentially tells us whether people, depending on rates, guys, rates will determine whether or not people go risk on or risk off. Okay, this is that risk line right here. This is risky, and this is not so risky, not risky. Okay, when interest rates are high, people tend to lean towards this side of the scale. When interest rates are low, people tend to go far out the risk curve to get more yield on their money. Okay, so now we were looking at these two numbers because these two numbers is basically what dictates what the Fed is going to do, whether or not they're going to increase interest rates or, well, bring it down a notch. Right, so now what's really happened is that I feel like because of these banking collapses that have taken place over the past, well, 1 week, it's sort of taken away importance of the CPI read, okay? However, we're not going to jump into all the nuances of that and why it takes away the importance. What we're going to say is this. Now, because of the banking collapse, people don't think he's going to increase interest rates this time around at all, okay? And I'll show you where I'm getting that information from in a minute. But what's going to really add to the whole bullish narrative, okay, what's going to give the Fed a bit more fuel behind, well, not raising interest rates at all, is if this print right here, okay, the CPI print, which comes out today, comes in lower, so less than what is forecasted. Okay, so let's talk about what has been forecasted so far for the CPI print. Okay, I'm just going to scroll down. This is the data that I have in front of me right now. Okay, so this is the historical data for CPI. And now check this out. Okay, so now the release date, let me just change my pen. Now the release date is March 14th, which is today. Okay, March 14th. Now this comes out today, and notice what's forecasted. What's forecasted right now is 6%. If the number that we get today on CPI is less of this number here, okay, is less than 6%, that's going to add a bit more ammo into, well, the Fed's arsenal there. Okay, that's going to give them a bit more sort of leverage to actually keep interest rates stable. Because remember, before the whole banking collapse, they basically wanted to see inflation at the very least come down on a month-to-month basis. Okay, that's also what tilts them dovish. And remember, interest rates are important. Why? Because of this, okay? It determines whether or not people go risk on or risk off, okay? Which will also determine whether or not people pour their money into assets like Bitcoin, into other altcoins, or hell, into equities, into even, say, real estate. Okay, it all depends on those interest rates. Alrighty, so that's why this is important. Now, if today's number comes in less than 6%, I think this is going to add a bit more ammo into their arsenal to actually, well, keep interest rates steady. Now, as far as interest rates are concerned, I did mention, a minute ago that people are basically saying that he's not going to increase interest rates at all. Now, why is this such a big deal? Why am I stressing this? That's because, guys, on a month-to-month basis now, he's just been increasing and increasing and increasing and increasing interest rates. Okay, so if he comes out saying that we're not going to increase it this time around, this is the first time in a very, very long time that we're actually going to go flat on interest rate hikes. Okay, so say if this is the curve so far, okay, this is how interest rates have been moving. This is going to be the first data point where we actually go flat on interest rate hikes. Okay, so this is going to be a very, very big deal for the markets. Alrighty, now let me show you what the market is forecasting here. Okay, now this has been a very, very volatile forecast so far for this month. It's because of all the events that have taken place. People don't know which side to sort of lean on. Are they going to increase it? Are they not going to increase it? How much are they going to increase it by? So check out what the market is saying right now. Okay, now you need to understand the FOMC meeting, guys. We're 8 days away from the next FOMC meeting. Okay, FOMC is only 8 days away. Okay, so now the FOMC meeting is important. Why? It's because that's the day that we actually get a tell on what they intend on doing with interest rates. Do they want to keep it flat, basically 0% rate hikes, or do they want to raise it once again? Okay, now this is what the market is forecasting. 43.9% of people are saying that they are not going to increase interest rates at all. Okay, so they're going to leave it at 0 BPS, basis points. Okay, and 56.1% of people are saying they're going to increase it by 25 basis points. Okay, now you need to understand that these numbers have been this sort of switch in sentiment between 0, 25, and 50 has been very, 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 very volatile over the past couple of days. Okay, just to show you, the last time we did a video was yesterday, and this is what the market was pricing in. Okay, only 7.7% of people said that they were going to keep it at 0. They were not going to increase it at all, and 92.3% of people were saying that they were going to increase it by 25 basis points. And this is the change so far. Okay, and just a week ago, this is what the numbers look like. Okay, 0 was not even on the table. 0% was not even on the table. This is 25 basis points, and this was 50 basis points. Okay, so people were actually swinging very, very bearish during this juncture. This is before the bank collapse and after J. Powell came out swinging hawkish. So yeah, it's been a very volatile week for market expectations at the very least. But now this is what is technically being priced in on the chart. Okay, and that's why now that people are thinking, okay, zero basis points rate hikes is on the table, that's why we're seeing these rallies across the board, at the very least on Bitcoin. I think the traditional space is still trying to sort of find a balance and then trying to sort of figure out, okay, what's going on with the market. But I think today's number is going to solidify things a bit more, okay, and as far as the CPI print is concerned. Remember, if CPI comes in less than 6%, this is going to add more ammo into their arsenal to, well, keep interest rates at 0. Basically go flat on interest rate hikes. All right, so now this is the print that we're going to be watching out for today. Okay, the CPI print, because this is going to give us it's going to give us that hint on whether or not, does the Fed have more ammo to keep interest rates flat or not, right? So, but now let's get on over to the charts to see if the charts are pricing in anything that we're perhaps missing. And now just look at Bitcoin's chart, and this is something that we had spoken about yesterday. This is now looking more like a bear trap than a bull trap, right? I mean, this has been crazy freaking price action over the past couple of days. But anywho, I'm currently on the monthly time frame for Bitcoin, and I'm gonna stress this again. For those of you looking for your long-term allocations, man, you guys should be focusing on your higher time frames. Do not get too stuck into the lower time frames, and be very, very unbiased when approaching, trying to, basically follow price action based on what the fundamentals are doing out there. Okay, because now we went over the fundamentals, and I'm telling you this, man, a lot that was risked in on this dump, a lot of people that actually priced in the risk has now been priced out, because all of those reservations have technically been put to rest now, right? So you got to call a spade now. Try and keep your biases at bay if you have any. Now, if we're just looking at Bitcoin on the monthly range right now, I had identified this for you in the last video, where we were sort of oscillating between that 55 EMA and the 10 simple moving average. And at that point, we were somewhere down here. Right now, in yesterday's video, we were actually sitting on the midpoint. And this is something that I told you guys on the daily. Okay, if I just sort of fix my scale there. We were hovering over the midpoint, and I told Sean, and I told you guys this as well, because we have sort of cleared that midpoint range. This is telling me that the high probability trade here is for Bitcoin to actually get up to the top of the range at 23.5K. Now, as things stand, Bitcoin is currently hovering over that region right there at around 23.5K. Now, if you had to ask me, Krisha, would you be buying here? The answer to that question is freaking no. I would not be buying here. Okay, the time to have been buying was yesterday during this region right here, where I told you guys that, hey, the high probability trade setup right now is basically for Bitcoin to rally back up to, well, that region of, well, resistance at 23.5K. Okay, that was the time when price came down to give you that retest right before the 12-hour close. That was the time to have been buying. Okay, however, now I would say I would not be a buyer right here. And why is that? Because now if I take you guys on over to the weekly time frame, check out where Bitcoin is currently at. We're currently back at that same region of resistance that we last got rejected on, right? Which is that cluster, that 200 EMA, 55 EMA, and 200 exponential moving average cluster of resistance overhead. And I'll think of the entire picture here. We have price getting right up into resistance, in addition to us getting into an event, that event being the CPI print. And now markets are still uncertain in terms of how the CPI print comes out, as well as how the Fed is going to posture in the next FOMC meeting, which happens in 8 days. But now with all of this, so we have these news events playing out, in addition to price up against resistance. This is not a region that you want to be longing at. Okay, there's very, very little alpha to be had. What I would wait for instead is for price to take out that cluster of resistance overhead with the 200, the 55, and the 200 simple moving average. Okay, because in addition to this resistance overhead, if I take you guys on over to the 2-day time frame, you'll see that we also have the 200 exponential and 200 simple coming in right above us. Okay, so there's a lot of resistance overhead, and that's why I would say be careful if you're looking to long. Now, does this mean I'm bearish here? Absolutely not, guys. I have been going over some bull run triggers with you guys. Now, even after this dump, okay, we lost one of those triggers. Okay, so now we were talking about 4 bull run triggers, 4, out of which we saw that 3 had already technically gone off, right? However, with this dump, we would then sort of reduce to only 2 triggers that had gone off. Okay, but now check this out. Now let's go on over to a recap of our bull run triggers. You guys are probably like, shut up, Krisha. But no, this is for me too, okay? So let's go over some of the triggers. Now, the first trigger was primarily hinged on the weekly dynamic, right? Clearing the weekly dynamic and using it as support. And notice that price actually got all the way down past the weekly dynamic, but closed over. And how? Just look at the pump that followed. Okay, but we managed to maintain that as support. So there is still a check mark on this bull run trigger. Now check this out, okay? So now we claimed the 4-day dynamic right here on the month of Jan, Monday, the 9th of Jan, 2023. You know, trended on top of that. However, with this current risk event that we had, we briefly lost it. No confirmation underneath that, because confirmation would entail 2 candle closes. Okay, we only got 1 for the next one to basically take it back swiftly. This is now looking like a freaking bear trap. Okay, if you're just playing TA, you know, keeping the fundamentals on the other side, you're not even looking at fundamentals, you're just simply playing TA, this is looking like a bear trap. Alrighty, so now we had this event with price now rallying a good, what is this? On this candle alone, that's a good 18% on just the body. Okay, this should have been a good 24% from the wick to, well, the top. Yeah, it's a good 25% on that candle. Okay, so that is the move that we saw. But what's important to note here is that so far, yeah, we have technically reclaimed the 4-day dynamic. Now, this 4-day candle closes over the dynamic. We now have an additional sort of confirmation on that. Okay, that is going to be another tick for the bulls. Alrighty, so for now, I'm looking at this as this trigger being reclaimed. Okay, now if I take you guys on over to the 3rd bull run trigger that we had, that was on the monthly Stokes. Let's go ahead, put on our oscillator. I'm going to turn off everything else. We're looking at the Stokes to be crossed bullish, and we are now still in bullish territory, even during that bearish event that we had right there. Okay, so all 3-on-3 bull run triggers are still active. Now, the 4th bull run trigger, while not active just yet, or rather, it has never been activated, that was still the one that we have been waiting for, right? Was hinged primarily on the dynamic, once again, the Ichimoku setting. I hope you guys are using this well. So this is the Ichimoku setting right here. Let's go ahead and put on our filter, which is the 55 simple moving average. Now, for those of you who want to take note of these numbers, please go ahead and do so, okay? You guys don't have to get the indicator. I go over it on almost daily basis, and I will give you guys the levels if you just ask for them, or I usually have a habit of just saying it out loud. But anywho, the dynamic level on top comes in at around 23,826, and the filter, which is our 55 simple moving average, comes in at around 24,861. Okay. Now, we are currently testing, we got rejected off of the 55 simple moving average. But let me tell you something about this trigger, guys. This is the investor trigger. I went and back tested this one for you. Okay, this is the ultimate investor trigger, and when it goes off, I'm saying this is where the long-term allocations pour in. Now, so far, we don't have a confirmation on this trigger, so we're still waiting on that. Now, also notice how this is resistance overhead. Now, does this all mean that we see a pullback on Bitcoin? Can we actually anticipate a pullback on Bitcoin right here? And for that, I want to take you guys on over to the Mango dashboard. Okay, yes, because there is something alluding to a pullback. Now, I'm currently on the daily time frame, and notice how the daily time frame for Bitcoin is currently swinging neutral. However, what's cool about the Mango dashboard now, okay, which you can find on app.mangoresearch.co, is that you're going to now see a very, very tiny arrow right next to your ticker. And if you now click on that arrow, bingo, okay, so now you get a drop down and you get a nice multi-time frame view of all of the time frames for Bitcoin. Okay, what is the trend saying across time frames? What is the volatility saying across time frames? Because now this is going to give us a good sort of it's going to give us a good picture on whether or not we could expect a pullback, as well as where is the trend at right now. Are we bullish? Are we bearish? What are we doing? Okay, so right now you can see that on the 4-hour time frame and the 12-hour time frame, they both have flipped long. Okay, the 4-hour flipped long a day ago, 12-hour time frame flipped long about 21 hours ago. Okay, however, notice the volatility on both those time frames, guys. 98 on the 4-hour time frame. On the 12-hour, we have 94. When volatility gets that freaking frothy, I'm usually looking for a pullback. Now, why this picture is even better than your average picture, okay, it's because now we have high volatility getting into resistance as well as heading into an event. I mean, there's nothing that screams caution as much as this picture right now, okay? So when I see volatility swinging that high with all of these other elements playing out, I'm usually looking for that pullback. All right, so now with this in view, let's get into the charts to see where the next pullback opportunity could present itself, okay? So now this is Bitcoin right here. Let's get on over to, well, actually, let's get on over to the time frame where the trend is currently being established at, okay? Because that will give us a tell on when can we really expect that pullback opportunity. So this is the 1-hour time frame, and I believe that Bitcoin is currently trending on the 1-hour time frame. You can see that ever since we actually started rallying right here, since Bitcoin was at 20.2K, ever since we started rallying, this is when, now this is, you need to understand that all the white horizontals on my chart is all marking out the monthly levels. So this is when Bitcoin is hovering underneath the 10 simple moving average, okay? So now ever since then, ever since we started that trend, we broke out, we have been using that 21 EMA as that underlining support. That is essentially what is driving the trend right now, right? That is what's highlighting the trend. So I will be expecting a pullback from Bitcoin as soon as we lose that 1-hour 21 EMA to the downside. What is the next level I will be looking towards? I'll be looking at this entire zone right here. Let me just actually switch my red box territory. Give me a second. Yeah, this is going to be the zone that I gun for. Okay, so now this, remember, marks out the monthly 55 exponential moving average, and now we have these highs right here on the 1-hour time frame as well, also lining up with the Kijun. Okay, let's go ahead. Now, this region comes in at around $22,664 for those of you who want to take note of it. Let's also go ahead and turn on our ribbon to see if there's anything else lining up with that region, perhaps on some of the higher time frames. How about the daily time frame? Yes, we have the daily 21 EMA swinging in right there. Man, this is so bloody bullish. How about on the 2-day time frame? Anything on the 2-day? Yes, we have the 21 EMA, the 10 simple moving average swinging in right there. 3-day time frame, anything? Nice. We have the 10 SMA lining up with 23.5K. Okay, so you can see that the zone is going to be a very important one. By the time price actually comes down there, we could see the 21 EMA also pop up, lining up with around that 22.6K region. How about the 4-day time frame? Anything on the 4-day? Okay, we have the 10 SMA smack in the middle of that box right there. How about the weekly? Weekly, we have the 10 simple moving average lining up with 22.6K. Okay, so that is going to be that next sort of immediate target that I gun for. I feel like Bitcoin could take two possible trajectories. We either sort of swing up, okay, like markets get super, super bullish on some news events, say, you know, JPOW comes out and says 0% rate hikes or something crazy happens. Either go straight up before we get the next pullback, or we get the next pullback here and then price rallies. I feel like these are the two possible scenarios. Now, depending on how we react up against resistance and support, I think that's really going to give us the major tell, even better than the fundamentals and even better than the news events that take place. So I'll be personally looking for that. As far as targets concerned, guys, the next major target to the upside comes in at around $27,692. Okay, also lining up with the monthly 21 EMA. The monthly 21 EMA is right there. Okay, so that is the next major target from where price is at right now to that region. That's going to be a good 13% to the upside still. Right, so this wraps up our Bitcoin analysis. Eyes on the price, guys. I am still bullish. Bitcoin looks great. This is now looking like one big fat bear trap. So now with this, we can get on over to APTOS USDT. All right, so here we are, APTOS USDT. Now, before I jump into the TA, I want to tell you how I found it. I found this primarily on the Mango dashboard. I was actually going through the coins. I'm like, it's been a while since I last covered an altcoin for them. So let me go and see what the dashboard is saying. And I was looking at the top coins right here, and I've seen most of them on the list before, right, prior to this. Now, this is all, it's all sort of filtered based on trading volume. And now, usually, like, you know, some time back, Aptos was on, on page one, but then it dropped in terms of trading volume. And so I didn't really see it on page one then. However, now you'll see that it's right here, APTUSDT, telling me that, hey, perhaps trading volume is building up on Aptos once again. And I remember the trend being very, very strong. And this, guys, is essentially what the dashboard is meant for, right? To bring the coins worth trading and worth looking at to the forefront. That way you are able to, well, you know, you're like, huh, Aptos is looking good. Let me go and see what the chart is saying, right? Something's going on here. And it's about that. It's about drawing your attention to the right coins, okay? And that's where the dashboard really, really shines. So now check this out. I found Aptos on here. I clicked on the drop-down menu to you know, figure out, okay, what's the trend saying across time frames and what does the volatility look like? And you'll find that the 4-hour and the 12-hour actually flipped bullish, okay, a day ago and 21 hours ago respectively. Now, if you caught a trade based on any of those long signals, you're already up on your trade by 3.56% and 5% as well. Now, we're seeing this long trend have its effect on over to the higher time frames. Like, for instance, the daily from short, it flipped neutral just a day ago. Now, we've yet to see this trend cascade on over to the 2-day time frame. So it's a very, very similar picture as Bitcoin right now. Okay, also notice the 4-hour trend. The volatility on here is flashing 98, telling us that, hey, we might very well get a pullback on Aptos soon. So I was looking at this picture. I'm like, huh, that's interesting. Let me go and see what the chart is looking like. So I get on over to the chart. Okay, now you can see that I have already done some preliminary analysis for you guys. But what I ended up doing is I ended up plotting in the weekly levels, okay, which is resistance at $14.38 and support at around $9.87. The white line that you see in between is my midpoint. Okay, but check out what lines up with the midpoint right there. Now I have written it down for myself. That way I know exactly what to bring to your attention. Okay, so I saw the confluence on the midpoint. In addition to the confluence on the midpoint, which we will be going over in a minute, I also noticed that Aptos actually broke out of a bullish pattern. Okay, I'm just going to clear out my ribbon for now, but this is the bullish pattern. All right, so we have a breakout of a falling wedge. Now, a falling wedge on a textbook standpoint is a bullish pattern. However, what makes it bullish, once again, guys, is the break. Now, why I particularly like this break is that not only did it break out of the pattern, but it has also closed over the midpoint. And as many of you guys know, for those of you who have been following my analysis for some time, you guys know that I use that midpoint to give me a tilt on should I be leaning bullish or should I be leaning bearish? Right? Which side has the biggest edge here? Right? Where is the high probability trade setup? Which one is the easiest trade to manage? The long trade or the short trade? And right now, just based on where price is at relative to the midpoint, it's telling me that the long trade is the easier one to manage. Okay, but now check this out. In addition to this being the midpoint, now if I go ahead and turn on my mango ribbon, okay, I'm gonna fix my scale once again. You'll find that the midpoint also lines up with the 55 and the 21 EMA as well, okay, on the daily time frame. How about the 2-day time frame? Okay, 2-day time frame, we have the 10 simple moving average swinging in right underneath us. Okay, how about the 3-day time frame? 3-day time frame, we had the 21 EMA as well swinging in right underneath us. Okay, in addition to the 21 EMA, it is also lining up with the 3-day dynamic support as well. Okay, so now we have a breakout of a bullish pattern. All right. In addition to us sitting on top of major confluencing support right underneath us, right? So I'm looking at this entire zone as the bid opportunity. Now, if we actually do get the pullbacks across the board, I will be looking for Aptos to actually come and tap the zone once again. You could actually use the entire, now for those of you in the Mango Seed program, you might have an opportunity to use the strategy of trading the wink. Okay, that's what I personally would gun for here, because I think at that point it would be very easy to manage. Because if price breaks underneath this region, you'll know that you are wrong on your trade very fast, and that way you can get out on either the retest or with a very minimal loss. The overhead target that we're looking at first comes in at around $14.38, basically that weekly range to the upside, okay, as well as the measured move of the entire sort of pattern breakout right here, which is this. Okay, if I take it from the top, bottom, place it on the break right here, where will that take Aptos up to? It'll take us up to $17.22. All right, that is going to be the next target. Now, from where price is at this current juncture to that region, that's going to be an additional 40% to the upside. That's target 2 as far as target 1 is concerned, which will just basically take us up to the top of the weekly range. That is going to be a good 17% to the upside. So I think these are going to be pretty decent swing trades to be had. But I'll say this, if Bitcoin dumps from here, I will be expecting Aptos to also take that pullback. However, if Bitcoin actually starts showing strength along this region, the market leader, especially getting into the events that we have coming up, I don't think Aptos is going to be a laggard. I think it's had a phenomenal move from the bottom right here, from the local bottom. And I do believe that this is going to continue. In fact, this picture might actually seem a lot more clearer than Bitcoin right now as far as price with respect to its immediate levels of resistance overhead. We've managed to close over. Question is, can we hold it? Can we get greedy on a bid? Now, the volatility index on the Mango dashboard, remember, if I go ahead, take you guys on over there again, it's telling us that, hey, volatility flashing 98, super frothy on the 4-hour time frame, telling us that we might be able to expect that pullback. Okay, you can see the 1 hour might be putting in a channel. Okay, so yeah, these are the little things to watch out for. I think this is going to be the best bid opportunity for Aptos. I personally am going to be gunning for this bid. So yeah, now this is all I have for you for today. Of course, if you guys enjoyed this video, make sure to smash that like button, and I will see you in the next update with this. Trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.